Hello, welcome to the Market Carver. I'm Adam Harter, Chief Investment Officer, along with Joe Clark, founder and managing partner. Thank you, Joe, for hopping on this week's Market Carver, where we find ourselves smack in the middle of June. And we've got a packed week here for you, and it's packed because of the first topic that we'll hit. I've got three topics for the week. We're going to talk about the June Fed decision. So each one of those certainly carries its own weight, or has for the past we'll call it several quarters. So we're going to cover that. We're going to look at whether or not we're in a bull market, and then believe it or not, we're back to hurricane season. So we'll dive right into the June Fed decision. Now, between the time that we're recording this and the time that you watch it, will be the actual Fed meeting. And save for a big surprise, which is always possible, we fully expect that what we'll find out is that the Fed, for the first time in several meetings, did not raise interest rates. All right, they are fully on this program of having raised rates, and they have us believing at this point in time that they're not done raising rates. However, they are going to take a break. They're going to call it a skip, a break, whatever you want to call it. The expectation is that they'll take a pass. And so what we're looking at here are the various interest rates for various maturities, and what we still have is what's known as an inverted yield curve. We have this scenario where you get paid a lot more for buying short-term treasuries, those that are even 1 month or 6 months, all the way out to 2 years. You get paid more than you do for taking a full 10-year risk for the treasury. So this is going to be a lot of the focus, looking at the Fed and specifically with regards to what their outlook is beyond this quarter. So a lot on the calendar in that meeting. And again, it's the rate decision that matters, but also this is one of the 4 times per year they give us a real deep outlook in terms of what they expect for the rest of the year. So a lot should come out of that. Next, we're going to call Joe up here to talk to you about whether or not we're in a new bull market. It seems like I've been in this industry a while now, and everybody's got their own definition for bull for bear. So Joe, why don't you guide us through your thoughts on?
Well, thanks, Adam, and it's so good to be here. You know, we've been doing the Market Carver since 2007, so this is 16 years old, and it's just happy to be able to share with you guys. You know, when you talk about a bull market, I think you can look at indices and get an idea of where they are. At the Financial Enhancement Group, Adam and I are always going to talk about the trend. Is the trend moving in a better direction or a worse direction, regardless of from where it started from? But when we talk about a technical bull market, typically people tend to look at it from a 20% low. And once the S&P 500, usually the indices that's used, has regained 20% of its value, going back to the low back in around October 12th, that you are indeed in a new bull market or a new positive trend. Now, Andrew Thrasher, who's usually with us here on the Market Carver as a chartered market technician, will tell you the difference between 19.5% and 20.5% isn't there. He doesn't care about the numbers. What he cares about is the value of what's underneath the hood, or what's driving the engine of the market. We still don't have the breadth there that we would like to see, but this is one of those terms you're probably going to hear it used in the media, is that we've reached a new technical bull market. It's a very similar thing when they talk about recessions, for instance. People think that the Federal Reserve talks about a recession. That's actually the National Bureau of Economic Research, NBER we call them. And they tend to say when you have 2 quarters of GDP contraction that you're in a recession. Does it mean you're in one, or are we just giving it a title? So here we are. Is it a new bull market? There is clearly a very strong trend right now for a handful of companies, most of which tend to be around artificial intelligence, but certainly in that technology, communication sectors, if you will, that are propelling this market forward. Now, this is a kind of an interesting thing. You know, we woke up this morning and we record these on Tuesday, and one of the conversations that came about was what's going on with cruise lines. Many of you who've been watching the Market Carver for years know I love to talk about demographics. The cruise line having success was a very predictable part of what's going on inside of life. People love to travel. They wait their entire years to travel. We know the peak of the baby boom was born between 1957 and 1961. And we know the largest demographic of cruise goers, 19%, in fact, happened to be between 60 and 69 years old, the second largest group between 50 and 59. So you can look at that group of people, and it's very predictable. You're going to have more people going on cruises. So the stock prices shot up. People are connecting people booking with actual business results. And this is where the process at FEG becomes so critical. You've got to have both sides. You can't just have excitement and customers. You actually have to be able to make money in the process. And so it's Adam's job. It's the process of our ability to go in and look at companies and say, okay, not only has it got the wind behind its sails, if you will, but it also has a business interest. Sadly, still most of the cruise companies don't have a lot of that strength yet, but we're in search for things like that all the time. Now, Adam mentioned that we're moving into hurricane season, and it's interesting. Some of the reports right now are showing that we're in much warmer weather than we have been in the past. And so, just as an understanding of how part of our process, our think tank, if you will, one of the things that we like to do is go in and look to see, okay, what has happened in the past in terms of damage that come from hurricanes. And that may sound like a very negative thing and a horrible thing, and we certainly don't wish any ill will on people. I was down in Daytona and got to see the destruction from Ian, and it's very, very sad. We had families that we take care of that were impacted by that storm, but still we can go back and we can see the damage. So what does that damage mean for markets in different places? And if when we change the slide, what you're going to be able to see, I think we've got both the slides up there. We may have kept the other one back internally, but it actually shows the different performance of different builders, different types of companies. One of the things that we really looked at was the generator section to be able to see what happens, what people tend to buy, where dollars are chasing to relieve other pressures that are being created by outside forces, or what we would call a trigger. And those are the kind of things that we're looking for. And we always try to have them on our watch list. So sadly, with hurricanes, because of the warmth of the water, they become more predictable than just possible. And we're able to do research ahead of time to say, okay, here's a company that fits that mold, or a sector that fits that model of being impacted. And by the way, they have a legitimate balance sheet. They have a legitimate P&L, good things that are behind them. So that brings the market Carver to a close this day. I want to remind you we're in the middle of this transition season where we're moving things to Schwab. Schwab merged with TD Ameritrade a few years ago, and that is happening over Labor Day weekend. So we're excited about new things that we'll be able to bring to you on the market Carver, but certainly things that Adam and Andrew and are able to use in terms of the allocation team, in terms of some of the things that we do. So you've got two behemoths that are coming together. Nothing but good can come from that, and we are looking very forward to it. I wish you a wonderful, wonderful June. It's so good to be with you. Have a great day. Don't forget to get your next step meeting scheduled. You can do it with a QR reader or simply go to yourlifeafterwork.com. Have a great summer. We'll see you again soon.